Good morning, guys and girls, and welcome to this morning's video. So this morning I have 4 pairs on watch. Those are Pound Aussie, Kiwi Yen, Dollar CAD and Euro CAD. I've just taken Pound Swiss off of watch. I am still interested in that. It's just from a filtering perspective, I just preferred these 4 today. So we'll start off with Pound Aussie. I did break this down yesterday. For those of you that are new to my videos, welcome, and I shall break this down again. So Pound Aussie on the higher time frames, we have this standout high here. Okay, we tap into it by way of this very large reversal structure there. Okay, we have the middle section within it. We break to the upside, wick just above, okay, catching people the wrong side of the market, and then we plummet to the downside, and now you can see we're trading back below here, and this to me just looks like a very simple impulse correction continuation to push lower, to potentially take out this low, or perhaps even go even lower down to here, although I wouldn't be looking to hold it down to here, just because I would anticipate a lot of profit taking, or at least some considerable profit taking in this area if we were to push all the way to the downside. Okay, I like the fact that if we just zoom in, or even before we zoom in, you can see that we've had this kind of expanding pattern, this reversal structure leading up to there. We have the washout, break back in, and you can see that we are consolidating below this, suggesting the price did not find enough liquidity here to send it to the upside, and confirming the idea that this is just an impulse correction continuation to push lower. And if we just measure the impulses before we've even drilled down, I do like it when you can do all of this on the daily chart without having to drop down, because that is a tick in the box in itself. If we assume that the impulse correction continuation leg out is usually of a similar length, that would take us down to here as well. So contextually, that also makes sense. So drilling down, you can start to see what's happening. You can start to see price broke this low. It broke it impulsively. It left a footprint. We did tap into that footprint, but we didn't break above. On the higher time frames, we don't always need to break above if we're going to move to the downside. Okay, it works slightly differently a lot of the time on the lower time frames. But one time when we do tend to break above, okay, rather than just tap into an area, is if there is the retest of the back end of something sat just above. So it doesn't surprise me that we came back up here and kind of near missed to this, because yes, we don't need to tap above if we're going to move to the downside on the lower time frames. But when we have the retest sat there, that is another reason why price would naturally find its way there. And you can see as well that we potentially have this, do apologize for the drawing, but we potentially have this little reversal structure leading up to it. And I did say in yesterday's video that I've noticed that when you have these middle sections within a piece of structure, okay, so when you have these middle sections like this, so if we were going to get a structure like this, when we were in this area, typically speaking, when the middle section is just a straight line, or primarily just a straight line, we tend to then get a structural approach leading up to that area, which has that more corrective middle section, which we usually see. Okay, so it doesn't surprise me what's going on here. You can see that 1, 2, potential 3. We also have, we also have this here. Potentially this is a 1, 2, 3 forming to lead up to it. Normally the correction wouldn't be quite as low. But what I'll be looking for today is the following. I'll be looking for price to tap into this area here. Okay, so I'm looking for a price to tap into this area, and because the structure is visible on the 4-hour chart now, this 1, 2, and potential 3, this makes this a 4-hour structure, and my rules dictate that if I'm looking for a risk entry from the edge of a 4-hour structure, then my time frame for entry is no lower than the 1-hour chart. So a 1-hour rejection from this area as a minimum, and then in this instance, I would have my stop loss just above here. If we got to this area and we spiked above, taking this low out, even better. And then potentially I might be able to, if that happened, crop through the wick. But we're going to see what happens if we don't quite tap into that area and we just tap into the area of value. Then I will put my stop loss just above there, just in case we spike back up and then down. tapping out those orders there. And then I'll be able to manage it down to this low for something in the region of 2.8. Okay, depending on the size of the stop loss. And then I would measure it from the range that we're trading within. And I'd set a take profit at the 90% area there. And I'd trail my stop loss at the same time, the 90% area being where price can pull back deeply, even if it's going to continue in the forecasted direction. So that is pound Aussie, Kiwi yen. I've just stuck this on watch. Okay, so Stevie yen, Kiwi yen. Okay, on the higher time frames, you can see that we have this high here. Okay, we near miss to it. These near misses often get filled. We move up to that area very correctively, which is typically what we see. And then what we also see is the last leg tends to have momentum. We break just above, and then price capitulates to the downside. And what I like about this at this moment in time is that we're consolidating below this low. We've had this very big impulse down. You might be thinking, what about this big wick here? Well, the first question I ask myself is if after a massive move down like that, we get a wick like that, which admittedly did reject off the bottom of this channel here, okay, which you could argue started there or there, because this is kind of a separate structure. Why would we be going to the upside? Okay, because we've already tapped into the area, we've already broken above. Price has no need to come back to that area because it's already washed out the liquidity, or certainly the lion's share of it, and that impulse to the downside was confirmation of that. That's an indication that we've washed out all the liquidity. So price, in my experience, is likely just pulling back for the next wave to the downside. Okay, computer is just the internet's just frozen up, so we'll just give it a second. Here we go. So price is likely just pulling back. Okay, for the next, if you think of a bow and arrow being pulled back, that's likely what it's doing. Okay, and you can kind of see that by, yes, we've had a little bit of impulsive momentum, but what you can also see is that we've had these tight consolidations. We've had a very direct move, and if we just study this bit here, we have this structure here, and we have this consolidation here, which was the retest at the back end of all of this volume, and also the retest at the back end of all of this volume. So that is likely an area where price would gravitate back towards, because there's likely, from if you think of it from people trading support and resistance, they believe now, many of them, that this is now resistance. Okay, we broke below, so many of them will have their stop losses above there because they think that's a safe place to have it if this now acts as resistance in their mind. Okay, resistance, you got that there potentially acting as resistance if we reject. So that's what they're thinking. Okay, so price is likely gravitating back towards where all that liquidity is, not people hunting the liquidity, but for the market to move, liquidity has to be taken out liquidity has to be taken out for the market to be able to move. Okay, because there's orders sitting in areas which are dragging price up or down. So those orders are likely dragging price up. Okay. Do excuse my voice. I don't know why this always happens. So with that in mind, what I'll be looking for is the following. I'm looking for price to tap into the area of value. Okay. You can see that price tried to commit here with this little bit of a structure there. Why did it not commit? Likely because of all those orders dragging price back up that I was talking about. So I'll be looking for a price to tap into the area of value, a push down, and in this instance, I would be happy with a 5-minute or a 15-minute continuation, because if we got an impulsive move from this area, we've likely washed out, for the reasons just expressed, lots of liquidity. Okay, and then that continuation afterwards would likely be just the banks and the bigger players stacking their orders for the next wave to the downside, and then I would be able to manage it down to the low of this structure, which happened to be the retest of the back end of that, for something in the region of 1.79, depending on the size of the stop loss, depending on the size of the flag, and then down to there. I would just target down to there, okay, because we could see some profit taken in that area, and I would measure the range, and I would set a take profit there for something in the region of 5.5, 5.6. Of course, if that didn't give me a 5-to-1, then I would just trail my stop loss because my minimum requirement for using the take profit is 5%. But that's what I'm going to be looking for on Kiwi yen. We'll see if that happens or not. Price might do something like this. We may push down, get a bit of a bit more depth there in that structure. We may get something like that. Who knows? We don't know what the market's going to do. All I need to know is what I'm going to do, and that's all I care about. So that is Kiwi yen. Dollar CAD. Okay, dollar CAD may not be ready by the end of the day. We're getting a lot of consolidation there. We've got news coming out. We might get some alerts go off in a second because we've got, I think it's unemployment claims coming out of the United Kingdom now at 7 a.m. Okay, but on this one, dollar CAD, what have we done? We near missed to the area. Same psychology over and over again. Near missed to that area. We came back up. We tapped into the area, broke above, caught people the wrong side of the market, and then we capitulated to the downside. And on this one, I like that trading below all of these lows now. And once again, this just looks like an impulse correction continuation to push lower to take out these lows, which happen to be the retest of the back end of all of this volume. Okay, so that's an area of significance. And note that we didn't break below. So just as we break above areas of value, higher time frame areas of value, if we're going to move to the downside more often than not, so too it's true on the flip side that we tend to break below areas of value if we're going to move to the upside. And note that we didn't actually do that here. We just literally just wicked to that area. So that means that from a context point of view, price has a reason to push to the downside because there's likely still orders in this area, especially if people are looking at this. If you think of it, they're looking at that as using support and resistance. Okay, they would have that plotted as a zone. There would likely be orders under there. Okay, so if we just zoom in a little bit, 4-hour chart, you can see that we had impulse correction continuation. We break below this low, price leaves a footprint. We near missed that footprint, and you can see that even on the 4-hour, that this is potentially an impulse correction continuation to take us up to that area where there would likely be a lot of orders. Okay, so what I'm going to be looking for in this one is because so on this one, I'm looking for a 15-minute continuation just because, okay, we do have, so if we measure this range, okay, you can see that there's a little sharp move sat just above, okay, and it is less than 50% of the range away. If you measure this range as I just have, when we have something there that's 50% of the range away, and I don't think this is necessarily the angle, but if we were to plot a trend line across there, that would line up with that. So potentially we could be moving a little bit higher. So in this instance, what I'm looking for is a push down and a 15-minute continuation just for a bit more deliberacy so that we don't end up, being tagged in, tagged out, price pushes up to there for the reasons just given, and then we drop from there. So I'm just waiting for a slightly more deliberacy. And because this is getting a little bit messy as well. Okay, so I'm looking for a tap into that area, a push down, and then a 15-minute continuation. And then I'll look to get short on the breaker within it. And then I'll be able to manage it down to there for something in the region of 2.5%. And my target in this instance would be that low, which I was talking about, that we didn't break below on the higher time frames. And down to there, we would have something in the region of 13%. And as I've said in the past, many of you may be watching this if you're new to my videos. In fact, I would measure the range would be there. Many of you might be thinking, well, why wouldn't you have this at the top of your list, this pair, because the profit potential is larger? As I said, I am sizing things up from a profit point of view before I put these pairs on watch or select my weekend pairs, okay, when I'm doing my analysis over the weekend. But that's not my primary concern, okay? As long as I've got a decent risk to reward, my primary concern is risk management, okay? So it doesn't go in order of what's got the greatest profit potential. It goes in order of which pair do I think could allow me to get my risk off of the table with the greatest amount of ease, okay? That's the order in which I'm doing things. So I'd set a take profit there, trail my stop loss accordingly, and that is dollar CAD. So we're just over 5 minutes to go. Euro CAD, it's a very similar deal. The market looking quite similar across the board at the minute. So what have we got on this one? So this is partly lower down the risk because you can see we've come from what's happening there? We've come from an impulse up, okay? But given what's happened since this, okay, you can see we've clearly tapped above here. What do? We near miss to that area. We tap into that by way of this structure. Do apologise for the drawing, but you get the point. Middle section, we've got the structure 1, 2, 3. We break above, catch people the wrong side of the market, and then completely plummet to the downside. Okay, and we've got the same thing happening again. I like the fact that we're trading below this low, or more or less below this low, below here. And you can see, once again, what I like about this as well is that we've got this little consolidation here and this low which near misses to it. So if people are buying here, where are they likely to put their stops? If they haven't put their stops just below this low, they likely put them here because they believe that this is a safe place to put it, okay? Many people would have bought here waiting for it to get to there and being too impatient to do so. So they would have thought, oh, well, I'll just stick my stop loss down there and then I can get in early and then I'm protected, okay? So there's likely stop loss orders there. So we near missed to that low. Okay, so that gives price a reason to come back down to the area. And I'm just seeing this as an impulse correction continuation to push lower to take out that low, this low near miss too, which kind of, I was trying to see if it lines up with that. It doesn't really line up with that, but we've certainly got context there. Okay, if we just zoom in, what happened? We broke this low, okay, and price left a bit of a footprint. You could argue it's there and you could argue it's there, okay? So when that's the case, okay, what I'm looking for in this instance, when you've got little multiple highs sat just above a structure, then I always wait for slightly more deliberacy. So in this instance, I'm waiting for a tap into this area of value, a push down and a 15-minute continuation. We may get something like, who knows, we may get something like this, okay, when we get something like that, and they get more of that structure, which would take a little bit longer. So we may get a near miss here, especially when we got this sat just below. Maybe we would do something like that, and this takes a bit longer. Who knows? But we're in the area now where we could be seeing entries. So what I'm going to be looking for is a tap into this area of value, push down a 15-minute continuation, and then I would look to get short of the breaker within it. I'd be able to manage it down to there for something in the region of 3.7. I would measure the range, okay, and from that range there, we have I would set a take profit just above this sharp move, because that is definitely where price can pull back deeply. If you look at the sharpness of the sharpness itself implies a lot of liquidity there. So when the 90% area falls just above the sharp move, then I always set the take profit at the 90%. Okay, because rather than let it go to that area, because it may not get all the way there. But anyway, I'd set the take profit there, trail my stop loss accordingly. And that's what I'm going to be looking for from these pairs today. Just to say that this will be the last video that I make until about the 1st of September now, because I'm traveling down to London tomorrow to see my family, who I haven't seen for 2 years. So I'm not going to be I'm trying to travel as light as possible. So I'm not going to be taking my recording equipment as I have done in the past. So I may, if I'm able to, I may post some like documented a document. If you're watching on YouTube, I won't be able to do this, I don't think, but I may post a documented version of my forecast on TradingView. If you're watching this on TradingView, I'll certainly be doing that. Maybe not all of the time, but from time to time within our private Discord community, within the Falcon community. And I'll see what I can do on YouTube. See if maybe I can post some documented versions of my forecast. But I will be back with more videos when I'm back from my holidays. But for now, have a great day. Have a great rest of your week, and I'll speak to you again soon.